Another week, another record low in housing, and no, we're not talking about record low rates. Hang in there, team. This is a doozy. Let's dig in. White or gray?
Great. Feeling good. Feeling ready to go.
Yeah.
Thank you. We are live, ready to go.
So last week's show was a bit rough. I know, not the most positive news ever, but we have to be honest and transparent with everything that's going on. And this week, unfortunately, guys, it's no different. We saw another record low in the number of homes for sale. Redfin first touched on this, sharing this graph and their findings. Here's the cliff notes. The number of homes for sale in the U.S. fell 7.1% year over year to 1.4 million. This is the lowest level in Redfin's records, which go all the way back to 2012. For reference, guys, there were 2.2 million homes for sale in 2019 pre-pandemic, which has been a historic norm for the industry, and we are now down to only 1.3 million homes for sale. That's the lowest on record for Redfin. We went back further and we will share that with you in a minute, but Redfin also stated the pool of homes for sale is shrinking because homeowners feel trapped by rising mortgage rates, which resulted in listings being down 25%. And I get it, guys. I mean, it's tough to sell a home with a 3% rate when your new rate could be 6 or 7%. As a result, home prices are going up dramatically, and a friend of the show, Logan, wrote about this in his HousingWire article titled "The Savagely Unhealthy Housing Market is Back." Super positive, stating massive home price gains aren't good, especially when they happen quickly. Once mortgage rates rise in this environment, it can lead to big-time demand destruction, which is exactly what happened. He also found that existing home sales are near 21st century lows. A couple of alarming stats and graph here, guys. First, existing home sales, which is pretty amazing when you look at it. I mean, we're back to the Great Recession levels, and at this point, the run down looks eerily similar to the fall in 06 and 08. Huge declines, but expected to bounce at some point. Another crazy one is NAR total active inventory, going back to 1984. Now, we shared the Redfin findings earlier that only went back to 2012. This graph goes back to 1984 and really tells the story over the past 40 years. Really never fully recovering from the Great Recession hit in 08. Side note, all this plays really well for builders. Their future looks bright for a very, very long time, and the smart folks grabbed their stocks when they hit previous lows. D.R. Horton, for instance, was trading at $31 during the lows and now back well over $120. But back to our point. All this leads to a third article that really summed it up well, titled "The Spring Home Buying Season That Never Happened." Oof, don't we know? The concerning trend is, will this turn into the summer home buying season that never was? Based off the Fed's action and future direction and the inventory problem we just discussed, very well could be. Hang in there, team. This too shall pass, but it may not be until next year. Whatever happens, know that we got your back, and we are the real estate source, and we will continue to bring you all the relevant data, content, and trends, good, bad, or indifferent, and we'll see you guys next week.